What's up, Kabroda crew? Welcome in. Thanks for joining the live stream today. Hopefully y'all are doing good today and ready to kind of jump in and see what's going on, see what's happening with the market. We're getting a little bit of a drop down today, kind of, I guess, expected, with how yesterday and then kind of coming in today is kind of setting up. We're seeing a lot of downwards pressure, still kind of happening on the market, even though it is getting kind of exhausted and oversold, but still a lot of downwards pressure, still a lot of so pretty much everything's still pointing down, besides the fact that we're getting to the point where we're a little over exhausted, just from dropping down for a while now. We're kind of sat sideways all of yesterday, coming into today. I mean, we had we had about 2,000 or so gap, couple $1,000 gap between the high and the low. So really not a big gap. I mean, there's not a whole lot of there's just not a whole lot of price action, really. $1,000 sounds like a big gap, but for Bitcoin sitting at 60,000, it's not really a big gap. It's pretty small percentage of Bitcoin. I mean, we just measured it here. It's about a 2% move, so not terrible, but that is bottom to top. Really, Bitcoin didn't even go that far. I mean, if we were kind of measure it where we were watching it, it's only a almost 1.5% gap between top and bottom. So we had a little bit of a run up, but not anything crazy. Mostly just traded sideways throughout the day yesterday. Kind of just like the system called out. Didn't end up really breaking down. We actually kind of did the opposite. Broke up above and sort of did a little run. I guess if you were watching it, you probably could have gotten something small out of there, but not anything huge. 1% or 1 to 1 or so, maybe 1.5 if you ran it pretty far. But yeah, not anything crazy. So a lot of sideways price action. Kind of just ran sideways, did a little bit of a dropout, and kind of broke through the bottom here. Coming into this morning around 8 o'clock. We broke down right down below. So yeah, we'll see what price action's like today. See if it's any different. There is that bottoming signal here though, so maybe we'll see a little bit more of a drop like we were seeing yesterday, and then we'll see that reversal start to come in, just from over exhaustion. But who knows, we'll have to kind of check out the charts and see what's happening today and look through it. Looks like we got a couple people here. So Terry's here, we got Spirit Maker, Kathleen. Welcome in, guys. Thanks for joining. Thanks for checking us out. If you guys wouldn't mind hitting that like button, that way we can reach more people, see our content, and hopefully more people will learn something from us. We'd just love to help people on their way to financial freedom. So most of that is just getting the reach out there for people. So the more people we can kind of show and share our knowledge with, then the more people that we can help. But yeah, liking definitely helps us do that. And if you're new here, you haven't already, just make sure you hit that subscribe button. That'll help us out, and also it'll get you connected with the channel. You'll see more of our content, so kind of a win-win on both sides. Anyways, yeah, welcome guys. Thanks for joining again. We're just about to jump right into it, kind of check out the market, see what's going on, see what's happening today. So yeah, like I was saying, not a lot of price action yesterday, but we'll see what today looks like, see how much different it really is. So we'll head on over to Kabroda.com, kind of start ourselves off here, make it full screen. We don't want that. All right, so we got PTC here on our market radar with a bearish 5 out of 5. So 5 out of 5 of our signals are pointing bearish. We are burning, which means we're kind of getting down. Excuse me, we're getting down to the bottom, kind of getting to that oversold point. We're running out of gas, I guess you could say, kind of getting it to the point where we're running on fumes, kind of slowly burning out. That's what that means. We do have the jewel behind us, and then our system is saying to stand down. So multi-agent system is what MAS stands for, but our system is saying stand down today. And then we have our breakout at 62,974 and our breakdown at, let's highlight, 62,368. So yeah, those are, I guess, just the levels there. We'll throw them on the charts. You can see them here in a second, but definitely looking at a stand down today, with the burning, with the move kind of burning out. It's hard to see any kind of trades down even farther, since we are looking at mostly shorts. Most of our indicators are kind of telling us that it's time to short. So the two are kind of conflicting, or it's just kind of like it's probably going to go down, but you're kind of trying to catch that falling knife in a way, because you also know that we're getting to the bottom, so you don't really want to. I guess you're not trying to catch the falling knife, but because that would be if you're trying to like long it here on the bottom. But it's definitely kind of trying to go down, and we'd be trying to take the last little bit off the market, which it's possible, definitely something you can do. But for our system, we just kind of say, well, it's better to kind of sit out for a little bit and watch and kind of stay out of the way, so that way you don't get smacked around while we're waiting for the chart to kind of get down there. Typically when you see the chart get near a bottom, like whatever time frame it's on, you'll see a lot more random weird price action. There's still definitely money to be made. It's just harder to predict, harder to read, harder to get into, especially for newer traders. So it's easier to just say, what, let's stay out, and let's wait a little bit, and then we'll get back in when the getting's good again. So that's why it's on there. We'll kind of read through it though. It'll make a little more sense as we kind of jump into it. But first off, let's throw those levels here on the chart and see where we're at for today with the levels. So open up our indicator here, we'll click on Wednesday, and we'll throw our new levels in, and this is what we're looking at. So you can see we have our 30-minute range right here in the middle. We got our breakout on the top, breakdown on the bottom. Looks like we already broke out today. Talking about this morning at around 8 o'clock. Yeah, that 8 o'clock candle, 50-minute candle, definitely was a breakout candle there. We tried to break out earlier this morning, but we ended up not being able to. Kind of ripped back up, ran above, tested 200, and then broke down. So we definitely have that breakdown right now. If you were kind of watching this earlier, I guess there technically was a trade. System did say stand down, so in all reality we didn't have anything today, but I guess there's a trade to the downside there. Yeah, again, 30-minute range in the middle, so not too interesting there. It doesn't really tell you much of anything. If anything, I would have said that probably leans more towards the top side, but really it's kind of just in the middle. We got our daily support line here above the breakdown line, so nothing too interesting with that. It's not really that big of a gap. So in terms of how our system used to kind of read it, the gap there would have been not anything interesting. You wouldn't have cared about that. Honestly, you wouldn't have traded because of the gap. Same thing with the top side, nothing really there either. So yeah, not too great in terms of the lines. We do have a almost a 1% gap here between the breakdown and the breakout levels. That's pretty good. Typically you want to see a 1% before you kind of just trade in general, because you want to see that percentage there. for the trade to be good, just based off of, you know, past data and seeing what we've seen before. Typically you'll want to see, yeah, over a 1% gap between the two lines. And, you know, today's just under, so I guess you could argue it's pretty close, maybe close enough. I don't know. But I don't know. I guess maybe, you know, we are breaking down right now, so there's a possibility. We are still in that 830 or 840, well, 830 to 845 candle here on the 15-minute, which is the candle that we typically watch out for. You might ask, why is that? That's because the New York future session kind of opens right there, so we want to be careful jumping into anything when that happens, because typically what happens is people will come in, they'll sit down, they'll start trading right around that 830 to 845 time, and that's when the market will start to see a lot of random movement. You'll see maybe not random, but definitely a lot of volatility will come in. So it's something you kind of want to be a little careful of, because you could see a big surge in buys, you could see a big surge in sells. I mean, if you look at this candle right now, we got a pretty massive amount of buys here in the first little bit. Pretty much the whole time is green, and then now we're flipping and we're seeing a well, I guess red candle. Technically mine are white, but you know, you're seeing a red candle kind of come in. We're starting to see that candle go short, go bearish, starting to drop down even farther than the previous candle, break the low and continue down. So, you know, just something to be mindful of. I mean, obviously today it wouldn't have mattered too much for the 15-minute trade if you were taking something like what I already have drawn on here. But, you know, if you were taking maybe like a 1 minute or something smaller and you saw the spike up, you could have got spiked out right there just because you had your stop a little bit too close to price action maybe. So, you know, just something to be mindful of. And a lot of times you'll see on the 15-minute, it'll actually be in an area where it could affect us if it does do something like it did today. So, you know, if it was up here and it did the same thing and came up above our stop loss, that would have taken us out. So, you know, just something to watch for. You know, we've been kind of looking at that, kind of messing around with it. The system is kind of built to withstand that now, so we've kind of filtered that in, kind of figured it out a little bit at this point. But in terms of, you know, just regular trading, that it might be something you want to watch out for. Yeah, looks like we're breaking down now, though. We got about another minute or two minutes, I guess. Really, it's probably more accurate. 2 minutes before the candle close, and then we'll get to see, you know, where the predator lines are. Predator lines are just the high and the low from this 830 to 845 candle. That doesn't really matter, I guess, too much anymore on our system, but typically whatever side of that breaks first is the side you'll see continuation on throughout the day. Not always true, but, you know, most of the time it is true. If we go back to yesterday, we can kind of look at it here. Let's see. We had 830 to 845 candle right here. So we had our yeah, let's see. We'll use this. We'll just use this. We'll use an Alt J line. So that was our candle there. You can see we broke above it. Next candle, the candle after that, we really broke above it. We did come back into it, and we kind of did throughout the day. But if you had just kind of taken the trade right off the top of that candle, you would have been happy with a little bit of an up move later in the day. And I guess if you were really into scalping, you could have took a small little move right off the top there, gotten out after a couple of candles, and taken that. Yeah, I mean, I don't know. Depends on your strategy. I mean, there's a whole lot of different strategies that you could employ. Maybe that's just a pretty basic one, but maybe that's something that you use or would want to use. But typically that's something we have found is that, yeah, when you break the either top or the bottom of the candle, you see continuation of whatever side it broke throughout the day. So if we see a little breakout here on the break of the predator low, close below, we could see a continuation down, maybe to around that 60,000 level we've been calling for last couple weeks. Who knows? We'll go ahead though, and we'll jump in and read our daily brief here and kind of see what's going on and see what's happening with the system, what the system's kind of calling, what the agents are kind of seeing at Kabroda, and see what's going on. So let's head on over there to our daily brief. These are the daily briefs that we're looking at possibly bringing out for everybody. We're not fully set on the name yet, or what we're going to call this. As of right now, it's just kind of like a little draft of our publication, and pretty much everything is kind of, you know, could be changed, could not be changed. I don't know. We'll have to see, you know, what's going on. We did just break here on the predator low, so we'll see if we get a close below there, and see if we can get some continuation throughout the day. All right, so today BTC stalls is 62,617 as 3 veto conditions fire simultaneously. BTC stalls, blah, blah, blah. Yeah, okay, same thing. Prices spent the overnight session grinding a $302 range centered around that 62,617, refusing directional commitment in either direction. 3 independent structural veto conditions are actively simultaneous, and no valid trade exists under current market conditions. So the structural picture today, the Bitcoin is mid-sequence in the bear 4 wave, with current bounce at 18.2% complete from the 60,055 wave 3 low. The dominant weekly trend remains bearish across 4 independent timeframes: the 4-hour, the hourly, the 21-day, and the 168-hour, with no dissent. The next structural event on the map is confirmed weekly close below that 60,055, which activates bear wave 5 and opens proportional structural projection towards the 42,000, 45,000 zone. And then it also says, you know, the little note about the early wave parameters needing that weekly verification. Essentially, we need that close below the 60,055 level, but we do need it on the weekly for a true confirmation of the Elliott wave, bear wave 5 kind of coming into play. That's what we've been calling for a while, you know, that 42 to 45,000 range. We kind of say around 50,000. Typically, you know, you'll see lower levels on the calls, but a lot of times you won't see us fully go down to those lower levels. You'll kind of see us kind of hover around, stop just above them, just because, you know, everybody might think it's going to go to 42,000, 45,000, but we'll kind of stop just above them. So I don't know, market makers typically do that. It's not really a big reason. It's just kind of how it works, I guess. So yeah, right now we're still in bear wave 4. Essentially what it's saying, you know, we talked about this channel all the time, but we'll need that 60,055 level to be broken and close below on the weekly before we can see bear wave 5 kind of set in, and then we'll see those targets of 42,000, 45,000, 50,000, those kind of levels come into play. If we don't get that break there, then we're looking for a target around 80,000 level. We need that to kind of hold for bear wave 4 to stay in play. If we break that 80,000 level, get a close above on the weekly, then that will be an indicator that, okay, maybe we are kind of breaking structure here. The wave's kind of over. We're looking for a possible reversal here on and moving on to more of a bullish kind of mindset and flipping there. So that's kind of the 2 levels that we've been looking at, you know, 60,055 and 80,000. It's got a number on it, but essentially just around 80,000. So either way, you know, if we break either way, that's kind of what we're looking for. Those are the 2 like big macro time frame. Those are the 2 levels that we're looking at. So the market sentiment for today, the fear and greed index registers at 17 out of 100. We're deep in extreme fear territory, a reading historically associated with institutional accumulation activity rather than panic liquidation. Sentiment at this level sits in structural conflict with the bearish technical architecture. The macro trend is aligned to the downside, yet the fear reading implies the market already pricing in considerable risk. The divergence between sentiment exhaustion and unresolved directional structure is itself a reason to remain patient. So essentially, we have the fear and greed index pretty low at 17 out of 100. That's a pretty low number. Getting into extreme fear territory, if you don't know, is a pretty big indicator that you're going to see somewhat of a reversal pretty soon. Typically, it means just that people are starting to get a little nervous about price, just tanking out even lower and lower. And when you see the majority of people start to either get nervous or get excited about something, you're going to see the opposite happen. So if people are all scared that we're going to continue down, we're going to go to zero, blah, 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 and that attitude start coming in, you're going to see the opposite happen. We'll see a little bit of a reversal here. The fear and greed will start to rise. We'll start to see it start to come up, and that's just typically how the fear and greed works. So essentially, yeah, with a 17 out of 100 score, you're seeing a lot of, I guess, indicator. That indicator, I guess, is telling us that we're definitely going to see a bottoming here pretty soon. Now, it doesn't mean that it's perfect. It doesn't mean that, oh, we hit 17, we're going to go up now. It just means that the market is starting to get to a point where we could see that flip. We're starting to see some burnout. We're starting to see maybe some time when other people might be coming in and buying up all the people that are selling. And we might see the market start to flip here pretty soon. Doesn't mean we couldn't drop farther. Doesn't mean we couldn't drop below 60,000. We could continue dropping and fear and greed could rise. That's happened before. It's just a good indicator. It's one thing, out of the list of things that we look at for a possible reversal here. So, just something to keep in mind. It's 17 out of 100 today, so just something to, think about. Just kind of look through, just give you a different lens, I guess, to look at the chart. Today's energy. So the macro read represents a constructive bearish continuation environment with a strong directional field. The dominant trend is aligned and momentum has been building. The 4-hour time frame, however, shows momentum exhausted at current extension with the oversold stochastic conditions, meaning the bear side has traveled distance and an immediate continuation fuel is thin. The 15-minute time frame is compressed across time frames with unclear directional velocity, and the across time frame exhaustion signal is active. Entry timing is structural or unresolved at the open. So all let's say we're kind of conflicting, not a lot. We could go down, could go up. There's just no real trade because there's no conviction of either side. So we don't really want to take. You might look at the chart and be like, all right, well, it's probably going to go down today. Just looking at it, but you don't really have conviction on the other. Some of the time frames are saying, well, it could go up today. Some of them are saying, well, it could go down today. So, overall, we don't really want to take a trade where there's so much conviction, so much confliction happening on the different time frames. As a setup, so the session Veto is structurally energy insufficient for a valid trade. So again, we're not looking to trade here today. There's 3 independent veto conditions active, and each is sufficient on its own to prevent a trade insurance. So the veto number 1, the box size floor of the session opening range measures that $605, representing a 90.97% of the upper structural boundary, falling below the 1% minimum floor enforced by the performance auditor, following 0 correction calls from 3 sessions with comparable range compressions last week. Neither the breakout trigger at 62,974 nor the breakdown trigger at 62,369 offers a measured move into clear airspace. Major structural cluster at 63,148 intercepts all upside targets, and a major structural cluster at 62,297 intercepts all downside targets simultaneously. So we have actually broke below this level here. But regardless, our session size that we were talking about earlier, so the distance between the breakout line and the breakdown line is just too close. We need to be above that 1% minimum, and right now we are at 0.97%, so just below, but still technically below. Like I said, this is an AI that we have that goes through the chart, so maybe it's a little too exact on that 0.97. Maybe you say, well, okay, we'll just round it up. It's close enough to 1 that you could round it up and be fine. I don't know, you just kind of have to look at it, but that's why we also have 2 more conditions, so we'll take a look at those next. Veto number 2, multi-timeframe fuel depletion. The 4-hour momentum read is exhausted at current extension with an oversold stochastic satisfying the fuel depletion condition. 50-minute time frame is compressed with no directional velocity with a ribbon spread of 0.03% and the deviation at 1.08%. Both readings confirm momentum compression threshold. So 4 hours exhausted, 15 minute, kind of just said it right there. So don't really need to repeat that, but essentially time frames kind of conflicting, and even within the 15-minute there's conflictions. So I don't know, stay out of it. Veto number 3, the hard performance audit rule. The 50-minute compressed no velocity state produced 0 correct directional calls from 3 attempts last week. Configuration now triggers a hard veto independence for all other conditions until 5 resolved calls clear the record. So essentially, yeah, going down. Well, we're not going anywhere, I guess. Not anywhere that you'd want to be trading. Additionally, hidden bullish divergence at the London Open is unresolved. Counter rally capable of sweeping short side stops before any bear continuation remains a live structural risk. So yeah, another thing on top of that, we do have some divergence there. Divergence is something you want to watch out for when you see actually hidden bullish divergence. Interesting. I believe hidden is continuation, so it's interesting that it would say hidden. Here, let me get a drink. All right. So yeah. Anyways, basically all that to say, there's not a whole lot telling us to trade. There might be some indicators telling us that it's going to continue down, just like you're talking about with the predator low. We are getting a little bit of a close below, so maybe we will see some continuation down. If you took something like that, maybe you'll see that continuation down, maybe you won't. Who's to say right now? But basically, kind of looking at it from a wider point of view, with different things kind of going into it, there's a lot of things that are conflicting and not really telling you a nice, good, clean answer. So it's better to just say, you know what, I'm going to stay out of it today. I'll stay away from it today, rather than, jumping in and trying to trade something that is telling you that there's a pretty decent possibility that we're going to see a reversal here pretty soon. Maybe not reversal in the long term, but definitely a reversal. Could be a pretty decent little reversal up to kind of recover a little bit, and then we'll see the drop down if we are going to get it. Anyways, let's look what would change this. So the sessions become structurally tradable when 2 conditions clear together. First, 15-minute time frame must exit its compressed state and print momentum aligned across time frames with no active exhaustion signal. Second, the opening range must expand above that 1% floor, requiring either sweep of the breakout trigger to 63,373 or collapse of the breakdown trigger at below 61,950. In both conditions are satisfied simultaneously, the bear architect is intact and the short side setup re-engages at breakout trigger. Till then, no directional trade is structurally valid on either side. One thing to note is really you just need to see this first one with the 15-minute time frame. With the 1% floor, well, one, it's not going to change today because they're kind of set. Once they on the chart, they're set, so it's not going to change. But why I would say that is because you're close enough to that 1% floor. If you really wanted, if it was going to go down and the other condition was met, you could say, okay, well, we're close enough. We kind of hit that 1% condition, even though you know, it's a little bit below. We'll say we hit it and then kind of move past it, and then, you know, the other one will kind of carry us. But I still haven't really got either, so it's still kind of a stand down for today. Yeah, so looking pretty good today. Well, system's looking pretty good today. But we're mostly just looking to go sideways again today, kind of like it called yesterday. You know, it's exciting. We had a little bit of the drop down this morning. You know, you always kind of wish you got into those after you see them, but you know, the system didn't really call that today. Hasn't really called anything like that, so it's not something that you should be too sad about missing. You know, when the system doesn't call something and you don't take the trade, it's not a bad trade that you didn't take it. It's only a bad trade if the system calls it and you didn't take it. But yeah, that's really it. That's kind of all we've got to go through today. So just be mindful, you know, system is calling a sideways price action today. We're not too interested in taking anything either way. I would say, you know, just based off price action, definitely looks like it's going to continue that drop down. We did get the close below the predator low, so you know, there's stuff kind of lining up for a continuation down. However, like I said, you know, no trade today for the system, so just kind of a day to sit on your hands, maybe watch the system go down. If you're got a different system, you're looking at scalping, could be a good day to maybe scalp to the downside, I guess, overall. But who knows? You just have to kind of check it out, see what's going on. But yeah, for us, we're going to be sitting on our hands today. And we'll be back tomorrow to see if we got a different trade happening. Yeah, so hopefully that was helpful for y'all. Again, please like the live stream if you guys enjoyed our content. It really helps us get out to more people, you know, teach more people what we know. Hopefully it helps some people along on their journey to financial freedom. Yeah, thanks for joining. Thanks for watching. Thanks for hanging out with us for 30 minutes or so as we kind of check out the market, see what's going on for the day. We'll be on again live for 8:30 a.m. tomorrow. That's Central Standard Time. So if you guys are different time zone, you have to change that to your time zone. But we'll be live again at 8:30 a.m. again tomorrow, Thursday. So yeah, hopefully y'all can join us again. But yeah, until then, thanks for hanging out with us, and we'll catch y'all later. Happy trading, y'all.